At the GAIM Hedge Fund Conference in Florida, one of the panels that we'll be hearing tomorrow is Hedge Funders of the Future, the next generation. Joining me now is one of those members of the panel, Vasan, who is founder and chief investment officer of Trend Capital Management. Good to talk to you.
Good to talk to you. Good to be here.
So what is the future of this hedge fund industry? What's it look like? Why did you decide to launch a fund not that long ago?
Look, I think the future of this industry is changing a lot, and we're seeing it already in terms of the kinds of investors that are going into funds. The industry was founded around high net worth individuals who gave their money to very smart managers and said, please make me some money. That phase of the industry, I think, is over. We're now a $2 trillion industry, and I think that institutions are playing a much bigger role. So pretty soon, I think everybody's going to be invested in hedge funds. They just won't know about it.
What do you look for when you invest? You actually are in a number of different areas: equities, currencies, fixed income. So what intrigues you right now? Where are you finding some interesting opportunities?
Look, I think there are some very interesting macro themes, if you will, to invest in, and that's what we do. We're a macro hedge fund. And the first thing I think is that for the first time in about 20 years, Japan is an interesting place to invest in, because you finally got a government that has decided that it will not tolerate deflation anymore. And if the government is able to execute that policy in a successful way, I think that's going to be very, very important in terms of what happens to Japanese asset prices, both equities as well as the yen. The second thing I think that's very, very important here, which is happening right here at home for us, is what's happening with our entire fiscal picture. The United States has got a very important debt ceiling negotiation. Given how Congress and the President are currently sort of talk to each other, it's going to be a very cantankerous negotiation. But mark my word, it's going to be very important that this deal is struck and this deal is cut.
Well, let me just jump in. How do you translate that to an investment opportunity then? Where do you actually invest to play that?
Here's what we think. We think that the deal gets done. Mm-hmm. We think that it gets done in a suboptimal way, which is the sequestration takes hold and the debt ceiling gets extended. As a result, the Republicans get the spending cuts they want, and debt to GDP in the United States, stumblingly, we have managed to solve that issue for at least the next 10 years before the Medicare-Medicaid time bomb hits. If that happens, then the United States once again becomes a shining house on the hill. We will have the fastest growth within the G7, we will have low inflation, and we will have a stable debt to GDP ratio. And I think for the first time in probably almost 10 years, the equity markets in the United States are going to start re-rating themselves.
When you look at equities, are you looking at any specific sectors or areas in the market that are more intriguing, whether that's large cap, small cap?
We don't trend to trade market caps.
You're doing the macro
We're
thing.
very macro. We're very focused on which equity markets are likely to outperform. And we think the United States equity market right now, the S&P 500, is trading at about 13.5 times forward earnings. We think that's too low. That reflects an enormous amount of risk premium from this fiscal issues and from all the systemic risks we've had in the post-crisis environment. You take that away, and we think we go back to a more normalized 15 to 16 times earnings, which I think is a substantial asset price growth over the next several years. Let me say one other thing. Anybody who buys U.S. government bonds today is guaranteed of losing money in the next 10 years. So when you look at the alternative, equities look very, very interesting.
Do you like anything else in the fixed income space?
Very little outside of what's going on in Europe. I think there is a process of re-rating that's taking place in Europe as investors are starting to realize that Europe does not have the solvency issues that they thought that they did. In fact, one of the things that made us quite successful last year as a fund was the fact that we were able to recognize early on that the solvency issues in Europe were being overstated by the markets. As that realization comes out of the market, we think there's still substantial scope for narrowing in those European government bond spreads relative to the German benchmarks. Let me put it this way. If those European spreads don't narrow, Europe doesn't grow. It's that simple.
What's the biggest risk that you worry about this year?
I think the biggest risk that I worry about this year is all on the political side. It's, for example, the Japanese administration once again disappoints us in terms of their ability and willingness to tackle deflation. Or we have a sense of absolute gridlock in the US Congress so that we do not generate the sort of outcome that I mentioned, which is debt stability for the United States, which is so important for financial markets. Those are the sorts of things that really worry me in terms of what could happen this year.
All right, Ashwin Vasan of Trend Capital, great to talk to you.
Thank you very much.
Thanks so much.
Cheers.
I'm Rhonda Schaffler. This is Reuters.